Hello, I'm Ken Moray, the founder and CEO of Retirement Planners of America. And I want to dive in with you to the most important number that we saw this Friday. We think for the entire month of June, we're going to get the inflation numbers next week, but we think the jobs numbers we got Friday morning are even more important, and we're going to go over all that with you. But before that, I promised you that when I was on my bike ride, I went on a 190-mile, 6-day bike ride across the French wine country. And something very interesting and special happened and was kind of a surprise. And I wanted to share that with you. So I'm going to do that first. I'm going to share that video with you right now. And then we'll come back and we'll finish up with talking about inflation, the Fed, and all that boring financial stuff. So stay tuned. We'll be right back. So we are preparing for the arrival of the Olympic torch. It's going to be running along this thing, and there's a military presence for it, which is kind of, I don't know if I feel safe or if I feel unsafe because of it, but it is what it is. So this is the lady. So who knew I was going to be in a disco party when they had the transfer of the flame? Now, something interesting is that lady that I was talking to, obviously she's not like a world-class athlete, in case you didn't notice, with all due respect to her. But it was quite an honor for her to be able to carry the torch and the flame. And the reason why is because she is the head of one of the most beneficial charities that helps underprivileged children. And so they honored her for all the work that her organization has done by letting her be one of the people that carries the flame. So quite an honor for her. But anyway, I hope you enjoyed that. So let's talk about what happened. Well, you know, the jobs numbers, we've been saying all year that before July, we didn't think there was going to be any rate cuts by the Federal Reserve. And that is now looking to be exactly right. These jobs numbers have completely taken off the table any thought that somebody might have had that the Fed was going to lower interest rates in July. Now, back in January, many of the big banks and all the big economists were saying, 7 rate cuts this year. Oh my gosh. And we were saying, no. We don't think there'll be any until after July. And now we're starting to think there may not be any until December. So that's a big change. Now, how does that affect our investments, our outlook, our strategy, etc.? Well, the thing that you have to remember is that when the Fed is now saying that they're going to be data dependent. And our view is the problem with that, and why we think the Fed is potentially making a mistake, is that if you're data dependent, it means you're looking at data that reflects the past. It's kind of like driving by looking in the rear, driving a car down the highway by looking in the rear view mirror. So the jobs numbers, that's already happened. It's not a reflection of the future. It's a data point of the past. If you look at the data that shows the momentum of the economy, Now that paints a completely different picture. What that tells us is that our economy is in fact slowing down, and in some cases very rapidly, and perhaps more rapidly than what the Federal Reserve wants. So our economy is massive. It's huge. It's like an oil tanker. And if you want to turn it, you can't wait till the last second to make the turn. You got to start turning it way, way in advance. So if they want to start slowing the economy down, or conversely, if they want to start counteracting the economy slowing down too fast, they need to start lowering interest rates way in advance of that. So that's the challenge here. So our view is that there's still a good possibility that before the end of this year, the Fed will lower interest rates, because as that momentum starts to build and the economy starts to slow down, which we think it will, that will then show the Fed that they need to act. So what does this all mean to us? Why do we even care? Well, as we've said many times, profits drive the stock prices. Okay, and the Federal Reserve, what it does with interest rates, drives the bond market. If they lower interest rates, bonds tend to go way up. So those two dynamics, if they lower interest rates, the cost of money goes down. Therefore, companies can borrow, they can spend, consumers can borrow, and if all of that happens, then profits could go up. And that being the case, the stock market tends to like when the Fed is lowering interest rates. Now, the bond market, and we've discussed this in other videos, not for today, likes it when interest rates go down also. So that being the case, we think the outlook for the rest of this year is pretty good. Okay, so we're still pretty optimistic. And as you guys know, we have a strategy we call Invest and Protect, which told us to sell in November of 2007, before the stock market crash of 2008, told us to sell the day before the pandemic was announced in 2020, told us to sell in April of 22 before all this inflation stuff caused the market to go way down. So we have a strategy to address that. And right now, it's not telling us that there's any storm clouds ahead. However, we do have it just in case. Our view is you must protect first. Growth is important, but protection of principal is even more important. So if things change, we believe you should have a strategy. And since we work with people who are over 50, who are retired or retiring soon, we think that's especially important if you're in that demo. So overall, the outlook, even though the jobs numbers came in hot, not what the Fed wants, we think the outlook still looks pretty good. So thanks for watching this video. Share it with your friends and family, and we'll talk soon.